Mike with Rags to Riches Trading here. We're going to take a look at another stock, and it is Nike. So Nike is down significantly, in the last month or so, but it's also down a lot from its post-COVID peak. So, it was trading at probably all-time highs here before COVID at about $100, took a big drop during COVID down to 68, and then with all the stimulus and everything going on, it hopped up to the 160s, 170s, and now it's back below 100 at $90 again. So Nike as a stock, has zero debt, and it always trades at kind of a high multiple. So let's just take a look at it and see if it might be worth taking a look at here. So let's look at earnings. So if we take a look at earnings, obviously nice positive earnings. Earnings 369 predicted for the year ending in May 2024 and 433 in 2025. So that puts the PE up in the mid-20s. So that's kind of high. So that indicates a lot of growth for Nike. The question is, can a company as big as Nike still grow? Right, they're worldwide and one of the top brands. So that PE is a little bit of a concern. Let's take a look at the financials. And maybe it deserves that PE. So look at the revenue growth going from 39, 37, 44, and then all the way up to 51 in May 2023. So revenues have been growing nicely, as has gross profit and operating income. A little wobbly there, but still positive overall. Let's take a look at the balance sheet, and we're going to see a nice healthy balance sheet here. So they have about $10 billion on cash or cash and cash equivalents on hand. So it looks like they currently have around $7 billion in cash and then another like $3 billion in short-term investments. That's probably government bonds, T-bills, or something like that. That's pretty safe. And then let's take a look at the long-term debt. So long-term debt, $3 billion, $9 billion. So they're sitting around $8.9 billion, but they could pay that off with their cash. So they essentially have no debt. Total liabilities around $25 billion on the company. Let's take a look at the cash flow statement. So cash flow, net income, positive net income, and look at the cash from operations versus their CapEx expenditures. So about $4 billion positive when we net these two numbers. So running about $5 billion or so every year in cash flow, I think, is what you can count on. So if we do 5 times 5, that's 25. So they could easily, pay off their debt, current liabilities, with how much they're bringing in from the business. So my overall thoughts on Nike, though, although it is down, right? Obviously, we went through the financials. Things look really good on the financial front. My only concern with them is, Foot Locker reported earnings about 6 weeks ago or so, and they just got absolutely crushed. Their stock plummeted like 30% or something like that. And I think also Dick's Sporting Goods crashed about 20% when they reported earnings. So I know Nike isn't as exposed to stores. I think they do have some stores. It's still kind of the same thing, that kind of sports athletic apparel. So it may be worth, although Nike, it looks like it could be a good buy here. They are reporting earnings this week, so it's probably best to just wait and see what that what that earnings report says. If the stock is down $5 or $3 or something like that, at that point in time, it might be worth selling a put on Nike, or adding a couple of shares for some kind of account that you have. So yeah, for Nike, let's just wait, watch, and see what happens when they report this week. Thank you. Bye.